presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. Hope you all are having a good day. Definitely some heavy movement to the downside today. The SPY off about 1.8% at 572.48, and you know we had that kind of counter trend bounce yesterday on lighter volume. Kind of looking for a down day today. Of course, we're getting that. You have the composite off about 2.55%, nearly cracking below 18,000. Listen. This is weird, guys. I mean, not weird. It's just the reality of things. Nvidia off about 5.07%. Okay. This is again on some contracting volume here. I don't know what Palantir is at, but let's take a look. You're off about 9.69%. Tesla's getting smoked. Off 5.75%. We're at 263. Man, look, we're coming right back. Even if you go back to the SPY, we're coming right back down to that Trump rally level, which is what we've been looking for. Talk a little bit about that, right? Does it consolidate from here? Do we go even lower? You know, I mean, the way that I look at it is you have this market going on for quite a while. You get the Trump bump. We give that whole entire thing back. And I still think there are, let me stop the scratching. How about that? Hashtag stop the scratching. Yeah, I mean, I think things have gotten worse. You know, you had CrowdStrike report, kind of bad forward guidance. I mean, that's heavy. Same thing with Marvel. Not bad forward guidance, but, you know, just not anything insane. Look at this jump down. I mean, this is wild. Off 18.44%. This is Marvel Technology. Talking about a $63 billion market cap company, negative 43 PE. This is tough stuff. I mean, this is repricing, you know. And, you know, there's way more to go from here if this persists. If things do not improve materially, you can get some weird stuff happening here. I think this goes down even further. I do think we're on light volume today, lighter volume. So you'll probably see a bounce back tomorrow. But again, the question is like, you know, what is good about anything that's going on right now for the economy? You just had Trump say, and thanks, Fletch, for putting that in the den, but you just had Trump say to a journalist, I'm not even looking at the stock market. Okay, that's fine. This is going to continue to happen. I don't see a trend reversal case here whatsoever. You know, your equities that are doing exceedingly well. You know, you're having some pullback on Chinese companies today. That's fine, but these guys have been outperforming for a while. The Europeans, Rheinmetall, again, slight pullback, but it has done exceptionally well. Let me see here. I got to figure out the ticker for Rheinmetall. But we were looking at the thing at like 860 and it's trading right under 1200. You know, you have Germany going in and they're trying to spend 500 billion over the next 10 years building out infrastructure, right, for the military. This whole thing is so strange. You know, if we sign this deal with Zelensky, ideally the war stops, right? Most likely how that will work out if we go the Trump route is that there will be a significant portion of Ukraine, at least the area that connects from Russia to Crimea, will be under Russian control. The tensions need to stop there. The Europeans are gearing up to continue to fund a war against the Russians, which I think is intense. I think that could escalate it pretty heavily. You know, if it comes out that, you know, Trump says, hey, we're not going to do this anymore. Zelensky signed the deal, not warring anymore. This is what we've all agreed to. Some of this land is ceded to Russia. That's what makes me say right now, if you're not in the European defense, do not try to chase the trend. Because if something like that can happen and completely pull the rug out. Now, I will say that the spending will still probably be there, right? But the exuberance around the spending and those equities, or ADRs in the case of what we got going on in Europe, or as Americans trying to buy European equity, you can lose a lot of exuberance around that. That's kind of my only thing. We take a look at another equity here. And again, all this conversation around these big, defense stocks, this is a satellite company. Okay, this is Eutelsat. These are the guys trying to build out the European Starlink. Again, they probably need this. This has, look at the movement here. This is unbelievable movement to the upside. You have just as much volume kind of coming to the downside today as well. I think there's a lot of chasing going on right now, and that's giving me pause in making any massive decision. Still think China's interesting. We're looking at BYD, you're looking at XPeng, Tiger, Baba, JD, I think China's kind of interesting itself. I saw someone writing this big article, I read an article, where it's like, listen, historically what goes on is if American companies do poorly or American economy does poorly, the rest of these equities get torn down. I think we might be in a paradigm shift, okay? We have really built this world post-war to really depend on us. Like, we are the casino. And what Trump is doing is essentially trying to extricate ourselves from that, environment. So whatever patterns existed in the past might not really be the case in the future. And that's something we're going to have to, follow closely and kind of adjust towards. Crude oil up about 0.15% at 66.41. Conversations that they might completely limit Iran from producing any oil. I'm not sure how that would be achieved. Again, there's just so much info and this or that and promising to do this and then revoking those promises in this market. I think to make any clear decision, at least at this moment, we have now traced back to the beginning of November, in a lot of these different things. We're closing that Trump bump. From here, I expect some kind of consolidation. And so if you're not in something right now, maybe just wait to see if anything kind of improves or changes in the general macro environment. You have gold contracts just basically sideways right now, 2009-24. Taking a look at our boy VGZ over here. This was one of Tom's favorites. You're off 1.12% today, but we've gotten, that is some fantastic, solid volume to the upside. Trading at that before that gap up around 61 cents and right now at 74 cents. That's fantastic. You go to our YouTube channel. There's a bunch of interviews with Tom and Fred Ernest, who is the CEO of Vista Gold, and I think those are well worth the quick look. Let's see what else we got. Silver up about 0.27%. You have copper up about 0.09% at $4.79. Let's see. Everything is red. Everything is unbelievably red, except AAR Corp. How about that? Up 0.81%. Folks, if you stay right there, we'll be right back. We're going to have Tim Ord of the Ord Oracle on. This is in that kind of gap area he was looking at, maybe a little bit lower. We're going to hear what he has to say. Folks, stay right there. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are working on getting Tim Ord on. He'll be on in just a little bit. So let's talk a little bit. Sorry, I'm reading this stuff this is from Bloomberg. Okay, this is an article they just released today. Europe's defenses risk faltering within weeks without U.S. support. This has always been, I would say, kind of an untenable position for the Europeans. You know, there's one of the things that kind of I didn't understand, and this is particularly with Germany, who seems to be, along with France, really beginning to spearhead this. Of course, the British are there as well, and so we'll see what happens with that. But I mean, Germany's kind of waking up. They had this potential to be completely energy dependent, right? And their Green Party got hold or convinced enough people that wasn't true. And I mean, this is what I find so weird about this kind of stuff, right? Where they're now militarizing to continue to fund Ukraine, bolster their own defenses in the event that the Russians just invade everywhere, which I'm not sure that they will, or they would at all. But I mean, you can't take that risk, I suppose, from their perspective. But I mean, Germany consumes so much Russian oil. This is a very bizarre thing to me, right? And so I'm looking up companies, regardless, they don't have enough ammunition. We all kind of know that. A lot of different attempts from the EU to make, whether it's an EU military itself or, bolster German military has been quite a failure over the past few years. But I mean, they're dumping tons of money in this kind of thing, right? Building a new Maginot line, which we'll see what happens with that. But, mainly this is going to be Bay Systems. This is going to be Rheinmetall. Give me a second here. It's RNM. That's right, RNM. Let me check it. I mean, this is wild, huh? Now, this is the ADR, of course. The actual equity is I think around 51 billion euros or something along those lines. But these guys get definitely a ton of exposure to this. Same with Bay Systems as well, right? Which I believe is a Rheinmetall subsidiary, if I remember correctly. So, I mean, this conversation is here. It's dominant. I still don't want to chase just yet. I think I'm waiting to see how this kind of develops between Trump and Zelensky. If they can sign that deal and there is a ceasefire and they can get to the table in some certain amount of time, you get some issues in the near term with these European defense stocks. on the longer term, still think they're a great hold, right? Because this build out is going to occur, I think, really, regardless of if there's peace achieved in Russia. Obviously, more so if it is. But I'm going to be waiting to see. Like, if you're not in it, maybe just take a moment to kind of wait for more developments on this. Folks, it is a Thursday, so let's do the thing that we do every Thursday, and the individual we enjoy having on, that is going to be Tim Ord of the Ord Oracle. That's ord-oracle.com if you want to check him out. We have Tim on every Tuesday and Thursday. We greatly appreciate his analysis. Of course, he was seeing quite a strong pullback in the SPY, and we've hit that region. I'm going to wager today that we're going to see the SPY hitting the lower Bollinger Band, which in some cases can absolutely indicate a at least counter trend bounce, right? This movement is really what Tim and I have been speaking about on Tuesday. I think we have light volume today. I can see a counter trend bounce as well. Now, what we discussed on Tuesday is it depends on how strong that counter trend bounce is going to be. If you get some nice movement to the upside from here on some significant volume, then we're talking about potentially a trend reversal, but we're going to let the man speak himself. Tim, how are you doing?
Good. Yeah, there's lots. We're at the point right now where either we break down, which I don't think we're doing, or we reverse in this vicinity. Most of these trades, if you're late in this week, usually comes on Friday. So what I'm saying is, more of the same maybe tomorrow, but in this vicinity.
Right.
But let's look at the bigger picture. The first chart is the top window is the McClellan oscillator. These are bigger signals, and anyhow, basically when the McClellan oscillator gets down below minus 300, which it did back on December 20th, or actually I could probably get my felt pin going here, but anyhow, right there, December 20th, 2024, which is a couple of months ago, we did get below minus 300. That within 30 days, you have to get above 200 or plus 200, go from minus 300 to plus 200 within 30 days. Well, it's actually 30 days, 1 day, because up here, on January 21st, 2025, we get to plus 200. And we did this pretty much, if you look where we are right now, actually, let me get my arrow here going. Arrow, which is right here.
Yep.
We're pretty much in the same vicinity as McClellan oscillator triggered the minus 300 to plus 200. And those things only show up in the bottoms. Back in October 2023, we had one, or it'd be October 2022, we had one, or it looks like about April of 2023, we had one, and they were all coming to lows. Before that, it was the COVID crash triggered one, so now we got one again. So intermediate, this is kind of an intermediate term. It doesn't say when they usually occur. They at least flip the market sideways. So I'm thinking at minimum we're going to go sideways here. So anyhow, that's that. So let's go to another indicator, which is the WAG breast thrust indicator. On Tuesday of this week, we did get down below 0.42 or actually got to 0.41. Ideally, you'd like to see at 0.4, but we had one back in started December and ran to January, and I went from 0.41 to 0.61. Took 6 days. Normally, the requirement is at least 10 days or less. So there's a WAG breast thrust indicator that pretty much triggered where we are right now. We're back actually at the bottom of January. We're testing that low right now. According to the Bragg Swiss indicator, once you get one, that becomes a support area. So either this indicator fails or it supports this area. So there's another indicator saying most likely we're probably at some low. We'll go on to the next one. This is more short term. The bottom window is the VIX, the weekly VIX. Next window up is the weekly SPX VIX ratio, and the next window up is the weekly SPX. If you notice, if you look over here, we're pretty much touch. This is on the weekly time frame, and you're running into the lower Bollinger Band. When I did this earlier, we're actually back down right smack on it right now. Last time we were there, it came in basically 2023 back in here. That was actually low before the intermittent term decline happens, but the weeklies rule the dailies. Whoops, we're ready to break. All right.
I know, Tim, I spoke too long in the beginning. Tim, please stay right there. Folks, we'll be right back with Tim Ord right after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Schuper. You're joined right now by Tim Ord of the Ord Oracle. We're looking at the SPY VIX. I want to say if you go over to TFNN.com, you go to the services tab, We have the 6 secret ratios every trader should know. That's going to go over the SPY VIX. That's the weekly, daily, the TLT VIX, the daily VVIX and VIX. Guys, check it out. Tim, what are we looking at here?
All right. The bottom window is the VIX. And if you notice, we're running into the upper Bollinger Band.
Yep.
And the next one higher is the SPX VIX ratio. We're also running the Bollinger Band. You can kind of see it on a exploded chart over here on when you blow up the window. And I noticed here on the weekly SPX, we did run into the lower Bollinger Band. So there's a lot of support in this vicinity. So let's go on to the next chart. This is the SPX tilt ratio. Actually, it started to get below RSI, below 30. Anyhow, the SPX, it's the bond market against the equity market.
Yep.
When one gets out of whack, goes too far compared to what the other one's doing, the RSI will rise above 70, which is the top, or the RS goes below 30, which is the bottom. And actually, we did start getting signals actually last week, and the market still has pushed lower. So it's a little bit unusual, but we're still in the vicinity of the 30 area. Actually, we're 35 right now. But I don't know why this market's kind of getting stretched. Could be a reason here, but I thought this was interesting here. If you look over in this part, explosion area, the SPX tilt ratio has actually been going up, with the market actually going sideways. That's a bullish divergence, so that's kind of unusual. So don't think we're out of the woods yet.
Sure.
But now this is a chart that we want to cover. This is actually today. We actually got lower. Let me do a pin one here. We actually did. Where's my? Okay, there it is. But we actually got down lower today, below the previous low. We hit a lower low. If you look at the volume, so you're comparing volume right now is approximately coming in about in this vicinity right here. We'll probably get higher than yesterday, but not higher than the day before.
Yep.
Which is this one right here. So we're breaking this low right, the previous low of 2 days ago, and that's when you key off of, not yesterday's volume, but the previous day's volume. So today's volume would have to be equal or higher than the 2 days ago. If it doesn't, it's a test of previous low. And a lot of people are comparing the volume back over here, which is this day. Oh, there's some truth to that. You actually like to see 2 days ago volume be lighter than it was compared to back in that would be January, early January. So you're not breaking out to the downside. You went below it and you closed above it. Now today you went below it, and if you close above it and it's going to be in a lighter volume, you're probably starting to it's probably developing a short-term low. So I'm still thinking this whole area, I'm actually long back on this day right here. And it kind of kept me long because I got a couple of trend readings, a couple of tick readings that kind of kept me in this trade. So now I thought we'd go down to the lows and test them, and we're trying to break through the January lows. And I don't think at the moment we're going to do that. And tomorrow is going to be the key, because if it's going to happen, it's usually all these trades, the best days to trade are Tuesday and Fridays. Yep. And so if Tuesday works out, the next logical trade will be on Fridays. So Fridays, so they make you sweat over the weekend. And if you get into a trade where you're going to be right or wrong, because Monday they won't let you in, either you're right or wrong. So anyhow, so I'm kind of watching all that. But if you notice again, as we're talking here, we got almost the open and close below the Bollinger Bands again. The last time we had that came on Tuesday of this week. We had an open and close below the lower Bollinger Band, and we're kind of doing that same thing again today. I circled other times in red here. There's one back here. Actually, let me get a highlighter here. There's one back here. This is another time you close below the Bollinger Band. This is another time close below the Bollinger Band. And here we did it 2 days ago, and we're kind of doing it right now, even though this chart's a few hours old. If you look at real time, we're actually below the Bollinger Band. So we're below the Bollinger Band at a support area, which is the previous lows back in January. So either, according to the other indicators I've had showed up to this point, this area holds, or all those indicators fail. So we'll see what happens come tomorrow. And tomorrow could be actually a dead day. It doesn't really give you the confirmation that you made a bottom or you made a top. But in my opinion, it'll probably be kind of just a worthless day, so we'll have to wait till Monday. But seasonality is actually still bullish. Market does not like uncertainty.
Right.
And Trump right now is giving a lot of uncertainty in the market. So we'll see how this rally goes. What I'm thinking is going to happen here is we're probably going to rally back up to this high up here, somewhere around 600.
I see.
That depends how the volume goes on that rally. If the advance climb's really strong and we attack the old highs, then that would help immensely on the bigger trend. But there's some big volume days up in this range up in here, so I'm thinking this is going to be a resistance area, pretty much where I got long at. And if we hit that area on higher volume compared to when it's going down, then I'll change my whole view, and then we break out to the upside. So, but the first test comes in around that 600 level, and what happens there is going to be important.
Okay.
So,
yeah.
So we can move on.
Yeah, we have about let's say 30 seconds left for gold, but please come to the next segment as well.
Okay. But anyhow, this is a volume deal. There's another concerning deal here. Just if you notice, this volume going down is actually pretty increasing. So depends on the next rally. If we got volume pretty much equal this going up, that would be bullish. If we don't, that would be bearish.
Yeah.
So are we making a worthwhile top? I don't think so. I think we're actually going to more or less flip sideways and build more cause here for a while.
Fantastic. Well, Tim, please stay right there, folks. We'll be right back with Tim Ward after the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. We are joined right now by Tim Ord of the Ord Oracle. Tim, it looks like we're about to crack into some gold.
Yep. Seen this chart before. Just as a reminder, the bigger trend's up. This is a monthly bottom window is a monthly GDX up-down volume cumulative with the Bollinger Band on it. Next window up is a monthly GDX advanced decline cumulative with the Bollinger Band up. Along these two indicators stay above the mid-Bollinger Band, the uptrend's intact. This type of indicators usually signals last anywhere from a year and a half all the way up to 3 years. So we got triggered last May or March, I forgot what it was, but anyhow, it's on a buy signal. Both indicators are holding well above their mid-Bollinger Band, so bigger trends up. So let's see what's going on short term here. Yeah, okay. I kind of flipped over to the momentum type indicators right now because I'm thinking we're going to have GDX start to actually just trend.
Okay.
And not for sure, it could just bounce around still, but I'm thinking we're going into a trending stage. Now, a trending stage, if you look back in, actually, let me change that color. Let's see, highlight. Whoops. Give me one moment here.
No problem at all.
Yeah, if you hope that's not too dark, but if you notice back in 2019, we got above zero. Mm-hmm. So anyhow, the bottom window is the 50-day average of the up-down volume. And as long as it stays above zero, the uptrend in GDX is ongoing. So I labeled all those blue or actually light green areas times when this indicator is above zero. And last time we had that was 2024. If you notice, we just stayed above 10 or stayed above zero. And I think that's what's going to happen here. We're going to actually stay above zero going forward. So I'm thinking this could be a trending market. Right now we're coming in about plus 14. Let me get an arrow here. Still getting used to this. That's invisible. If you notice right now we're at 50-day average plus 14.32. So I'm thinking we're going to stay above in this region and actually trend. And these markets can trend for months. Back in 2019, and part of 2020, we stayed above that zero line more or less 16 months in a row. In 2024, we got above the zero line, looks like about April, stayed all the way there, it looks like about November. And the market kind of chopped up, but it trended up. And I'm thinking this is what's going to happen here. The reason why, if you go to the top window, I got a dotted red line there noting the previous highs of 2020. Then we had one in 2024. We're up against that trend line right now. And we're probably going to see a surge here, kind of a dramatic surge through that line, because that's normally when you break a trend line, you have to have a sign of strength. If you break down below a trend line, you have to have a sign of weakness. And since we're going up, we have to have a sign of strength. And this trend line goes back to 2020. That's 4 years ago. That's a long time ago for a trend line. So the more time a trend line remains in existence, the stronger that move becomes to get through it. That's the reason why I'm saying it could be a kind of an explosive move through that 43 area. And I bet we bust through that area and really show a sign of, we'll have to show a sign of strength. If we don't show a sign of strength, that would not bode well for the market. So I'm thinking that's what's in front of us. And it could be really a trending market where they don't actually let you in. So we did have a decent pullback in late last year, and that's probably the best chance you're going to get to buy going forward, probably for the next year and a half, because I don't think we're going to see back down at 34 again, in my opinion. Years probably, because once you break above 43, then that opens the door for a huge trend to the upside. So it's going to be, my opinion, at least multi-month, if not multi-year rally. And so I think we're going to trend. So that's one trending market. This is a 50-day average. So I'm thinking we're going to start trending. There's a short-term one I also use. I use an 18-day average of this is a GDX up-down volume, 18-day average. Next one higher is the 18-day average of the advanced decline. And they pick out the shorter-term trends. They don't try to catch every wiggle, but it kind of gives you a warning that you might have a consolidation. Right now, when I did this earlier today, we're at plus 12 on almost plus 13 on the advanced decline one, and almost 12 on the other one. And we're kind of trending up. So the uptrend's intact. It doesn't try to catch all the wiggles. It just tries to catch the main trends. So we got this one saying a 50-day average. So this is 50-day average is actually, a 60-day average is basically 3 months, 20 days of trading every month. So a 50-day average is like a 3-month average, or close to it, about 2.5 month average. So it's a big average. So once it moves in a direction, it can stay there for a while. And this is an 18-day average, which is basically, over 3 weeks or so. So, but both of them are up. The uptrend's intact. Don't see any major divergences. So I'm thinking we're going to start approaching this previous high, and I think the market actually may speed up. So we'll see. If you go back to, actually I don't have advanced decline. If you notice, the advanced decline is almost setting at a new high, which is this indicator right here. But I'm thinking we're probably going to move up to here. So anyhow, advanced decline is probably, of all of the things going on, the advanced decline is kind of leading the way for GDX. So most of these gold stocks that have been sitting dormant and not moving much are probably going to start picking up.
So, I mean, are there any, we've been seeing with some of the gold miner equities, some of them are doing quite well, and other ones seem like they're having, kind of like regional issues with them, right? Are there certain, I know we're looking at the GDX, which is kind of like the, almost like a composite of a lot of the miners, right? But are there like certain regions you're seeing that you think will be stronger than some of the other miners, whether that's due to, currency-related issues or, national issues these countries might have, or are you liking the GDX in and of itself?
I like GDX in itself, but I look at the monthly charts and a lot of these. Actually, I was going to bring a one and just show you what type of things I look at to determine what stocks are good and which ones are not. And I'll remember, if I can remember, I'll bring that next Tuesday.
Yeah, I can email you too.
Yeah, and I forgot all about it, but I start off with the monthlies and make sure those monthlies are the ones, because the monthlies rule the weeklies and all the way down. So if you got a monthly working that's turned bullish, then you want to own it. So I'll show you that technique next Tuesday.
Fantastic. We're looking forward to it, Tim. Tim, thank you so much for joining us. We'll see you Tuesday.
All right. Thank you.
Take care, Tim. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You watch the Tom O'Brien Show. We're just joined by Tim Ord of the Ord Oracle. Again, check out ord-oracle.com. Additionally, you can check out TFNN Services tab. And you can see 2 fantastic webinars from Tim. Take a look. The volume in the SPY is shaping up to be roughly the same as it was yesterday. Of course, you know, you're looking at this low here, right? So we're making a new low on lower volume. So that can sometimes suggest, you know, you get a movement at least back to the upside. And as Tim and I were discussing, a lot of that is going to be dependent on what the volume is, right? If we sustain that kind of upward movement, or if we retest the lows again, you know, this is, I mean, really, you know, we're at this level we were looking at, right? Which is really the Trump win. I'm believing that while the technicals still hold for sure, that we're definitely in a macro-dominated environment, getting tons of stuff going into money market funds. I mean, we're talking T-bills. These are sophisticated groups as well, putting their employees in T-bills. There's just too much volatility. Meaning there's too much volatility with what Trump's going to say. There's too much uncertainty with what he's going to say. And on the macro level, I'm not convinced that we, you know, necessarily rally back up to these highs of 613. You definitely, as always, you know, you definitely get tests, right? And when that occurs, whether that's tomorrow or if it's Monday, you know, we were looking for volume. and kind of try to decide from there. One of the things I will say is that if you see it start rallying up, do not get the FOMO, right? I mean, we know that this market is now changing, right? Its behavior is changing. This is not the behavior it's had, at least over the past year. So, protect yourself and, stay froggy. Folks, thank you so much for joining me. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien for the morning market kickoff. Take care.